Hi, this is Chuck Hughes. Today I wanted to talk about an option income strategy that has the potential to deliver excellent returns this year, even if the price of the underlying ETFs remain flat. I'm displaying now a price chart for the silver ETF. This is the ultra silver ETF. It's a double beta ETF. Tracks the price of silver. You can see it's in a confirmed price uptrend with the 50-day EMA above the 100-day EMA. The ETF is making a series of new 52-week highs. You can see on the bottom of the graph that the on-balance volume line is sloping up, and it's in a leading industry group. So clear uptrend for the silver ETF. This is a price graph for the double beta gold ETF, symbol UGL, and like the silver ETF, we can see that the gold ETF is also in a strong price uptrend. This is a snapshot of some of my current precious metals ETF positions in my brokerage account, which show about a $70,000 open trade profit for silver Wheaton, the gold ETF, and silver ETF. Now I like to sell monthly call options against my precious metal ETF positions, and this generates monthly cash income. Of course, when you sell a call option, cash is immediately credited to your brokerage account, and you get to keep that cash regardless of the price movement of the underlying ETF. So I'm displaying some brokerage confirmations for call options I sold in December. These are January expiration options, and in February I'll close out the January calls and roll them over to February calls. This allows me to generate a monthly cash income from the sale of call options. And of course, by selling monthly call options, you take full advantage of the time decay characteristics of options, which lose time value very quickly in the month prior to expiration. So this is a great way to generate monthly cash income. Let's take another look at the price graph for the ultra silver ETF, symbol AGQ. Now this tracks the price of silver times 2, so it can be it can experience volatile price moves, but as a result it has very rich option premiums. So the ultra silver ETF currently has very rich option premiums, and the call options with about 1 month to go until expiration are priced at about 10% of the value of this underlying ETF. So when you sell an at-the-money call option, of course the option is comprised of only time value. So at option expiration, options lose all their time value, so that 10% time value becomes profit. So if you purchase the silver ETF and sell the at-the-money call, if it has a 10% time value, then it'll produce a 10% return if the underlying ETF increases in price, or if the underlying ETF remains flat. And if there's a 10% price decline in the underlying ETF, then the trade will break even. So if you sell 12 of these 1 month calls over the course of a year, this strategy has the potential to deliver 120% return if the ETF remains flat or increases in price. Even if it had two 20% price declines, it has the potential to deliver an 80% return, which is a very good annual return. Another way to take advantage of rich option premiums would be to initiate a call option spread. And this is an example of a current call option spread I recommended to the members of my Inner Circle Advisory Service for the Silver ETF. And we purchased the 90 strike call and sold the 110 strike call. And I'm displaying the call option spread analysis, which shows that this trade has the potential to deliver a 47% return if the silver ETF price increases at option expiration, or if it remains flat, or even if the price of the underlying ETF declines 30%, this would still deliver a 47% return. So this deep in the money option spread has a 47% return potential if the silver ETF goes up, stays flat, or even decreases 30%. So this is a good example of a very low risk way to trade the silver ETF. This is a great return for a trade that has good 30% downside protection. This table displays the closed trade profit results over the past year for my Inner Circle Advisory Service. So in 2010, the 6 trading portfolios in the advisory service produced total closed trade profits of $340,000, and we had an average monthly return of 44.7%. So we had a very good year last year despite the market volatility and the uncertain economy. And this table displays the current open trade profits for the Inner Circle Advisory Service, and the 6 trading portfolios currently have over $962,000 in open trade profits, and over 95% of the trades are currently profitable. So we're looking for a very successful year in 2011. If you'd like more information on the Inner Circle Advisory, please log on to chuckhughesic.com. This is Chuck Hughes, and I want to thank you for listening, and I'm wishing you a healthy and prosperous new year.